Hey guys, good afternoon. Welcome. Thank you guys for joining us this Tuesday evening. I hope you guys are having a great day so far, and I'm glad you guys are spending it with us. As we talked about, or your counselors have mentioned, we are going to be talking about insurance today. We have the pleasure of having the State Farm team here. We have Chris and Tina, so we are excited to have you guys here. Definitely, if you have any questions, we will have a Q&A section. You're more welcome to, write down your questions. And if we have a chat box, you guys are more welcome to leave your remarks or have any questions or comments. Definitely write that in the chat box. At the end of the presentation, we will have a Q&A. So if you'd like to kind of have your question answered, definitely wait till the Q&A. But if there's something you have questions about or need more details, we will definitely let our professionals take care of that for you. So with further ado, let me introduce Ms. Tina and Chris with State Farm.
Hello, everyone. I am Tina Munchmeyer. I am currently coming to you live from North Dallas. I'm in auto underwriting at State Farm, where I have worked for 24 years tomorrow. That will be my anniversary, Chris. Did you know that?
I did not know that, Tina. I need to read the News Hub a little more closely, I guess. And I'm Chris Pace. I am coming to you live from just north of Atlanta, Georgia, where it is way too warm for this hat. So I'm just take that off right now before I start to sweat on camera here. And Tina and I go way back. I started my career with State Farm 20 years ago in our auto underwriting division in Charlottesville, Virginia, which is where we met.
Oh, yep. So love the music before the session started. I hope everyone's in the holiday mood and spirit. We are with our cute, ugly, weird sweaters, whatever you want to call it.
Oh, weird.
Yep. Wearing another one. Hopefully you all are in the spirit. Now, okay, so we know, it's what time is it? 6 o'clock here, Central Time. It's probably dinner time. You might have families that you're needing to take care of and feed. And the last thing you might be interested right now is insurance. But we do appreciate you being here, because while it might not be so glamorous to talk about, it is definitely very important. And especially as up and coming or recent home ownership individuals on the call, this we hope is going to be very informative for you, if not a little entertaining too. We're going to try to make it not so boring. So bear with us, as we go through this, because it is, hopefully you'll find it's good and valuable information. All right, Chris, any other thoughts before we get started?
No, ma'am, I'm ready to go.
All right, let's rock and roll. All right, well, hey, Chris, did you hear the joke about what hospital gowns and insurance policies have in common?
I do remember this one. Actually, it's the obvious. They're both made out of paper, right?
That's actually a really good guess, but no, you're wrong. You're never covered as much as you think you are.
Yeah.
All right.
Yeah, I can see that.
Yeah. Well, ladies and gentlemen, that is why you're here this evening, not for this comedy routine, but to learn the importance of insurance and not being left open to the unknown. Okay. So why is it important? Why are we here? What do we need to know? Insurance is something that you pay for in hopes that you never have to use it, but thankful in the event if it is needed. You've worked hard for what you have. You want to be sure it's protected. Chris, what are some other reasons it's important to have insurance?
Yeah, well, I mean, Tina, the old adage goes, accidents happen, right? The very definition of an accident is an unfortunate incident that happens unexpectedly and unintentionally, typically resulting in damage or injury. Life happens fast and can change in an instant. You can't predict when you'll need protection.
Chris, you're right. And bear with me for just a moment here as something comes to mind and I'm going to go off script.
Oh, that's fun.
Okay, yeah. Well, on a serious note, I'm sure we're all aware of the horrible tornadic activity that has happened in several states. Was it December 10th, a few days ago?
Yeah.
And all of the devastation that caused. And our hearts certainly go out to those who are impacted. But if I may, if you will, group, allow me to use that as an example of what Chris just said about things happen unexpectedly. We never know. And if you're at least protected financially, then that will at least release some of that burden, should that happen. So, yeah, it's unexpected and things happen.
You're right, Tina. And we're going to talk about a lot of things tonight that apply in the situations of large loss, right? Loss of home, loss of auto, loss of life. We're going to cover a lot of those different insurance topics.
Yeah. So the storms come out of nowhere.
Yeah.
That car accident, we didn't mean for that to happen, but it happens. So how are we going to protect ourselves?
That's true. And Tina, so it's less costly to pay insurance premiums than it is to repair or replace your property in the event of a loss, right? So paying for insurance is a safety net for later. Tina, that one makes me feel good. It's knowing it doesn't only protect me, but also my loved ones. And you can't put a price on that.
Right.
And depending on what is being covered, insurance may or may not even be a requirement,
Yeah, thank you for that. We have a good list here. Now, let's review some key insurance terms. Some of this can be a little confusing.
It can be, even for those of us sometimes that are, in the business. This is going to be the fun stuff, right? Insurance, insurance is fun. So insurance terminology, it can be really complicated, right? So we're going to break it down so it's not quite so foreign. Premium. We talk about premium a lot. Premium is simply the amount you pay for the insurance policy. So it's what you owe, it's what's due, right? Liability. Liability is what your policy protects you against. So liability can be defined as a legal or financial obligation. As a property owner, you are legally responsible to make sure the premises of your home and property are safe. And you can be held accountable if anything happens on your property, whether it's due to an oversight or negligence. Hey, Tina, that puppy that you got, it's been a while ago, right? So your puppy is now a dog.
Well, almost. She's 18 months. So I think that's the line there for puppy and adult.
Yeah, that's cut off. She's a dog tomorrow.
Okay.
You need to make sure that you keep your puppy on a leash or in your fence.
Well, she's sweet, but what happens if she does bite someone?
Well, if you have homeowners, you may be protected. Some insurance companies will not insure certain breeds. So be sure to share everything with your insurance company. You don't want an unfortunate surprise. Okay, let's see, what's next? Next, deductible. Oh, yes. So deductible is the amount you agree to pay upfront and out of pocket when you make an insurance claim. As a good rule of thumb, higher deductibles equal lower premiums, but you do need to be sure that you can afford to pay that deductible amount in case something happens. All right, let's see here. So the next key term is covered loss. So a covered loss, stating the obvious, right, is a loss that is covered by your policy. And not all losses are covered losses. Think about hurricanes, for example. Flooding is an excluded loss unless you specifically have flood insurance. Your insurance company can help make sure you have adequate coverage. And last but not least, multi-lining. So now we're talking savings, right? Having more than one policy with a company can save you money across the board. For example, if you have your homeowners and auto insurance with the same company, you will likely save money on both policies. So Tina, what's next?
All right. How about I give you a little breather and I'll cover the various types of insurance.
Sounds good. If I had water, I'd drink it. Take it away.
All right. All right. We're going to discuss 4 types of insurance. I'm going to give a high level right now, and then we'll get deeper into each one. The first one is renter's insurance. Renter's insurance is for when you do not own the home. So whether it's an apartment, could be a single family home, condo, townhouse, but you do own the contents. So you don't own the structure, but you own the contents inside, your furniture, your clothing. And that's what it covers. The renter's insurance covers your personal property while living in a home owned by someone else. Okay. Homeowner's insurance, which is next, is when you own the home and everything in it. And also can include storage buildings or outside structures on the property. All right. Life insurance. Life insurance covers your life or someone you love in the event of death. And the fourth one being auto. I'm sure we're all probably pretty familiar with auto insurance, but it covers your car in the event of an accident. Okay, Chris, ready to take a closer look at each type?
Yes, ma'am, I'm ready.
All right. We are going to look at renters. All right. So Chris, will you go into more depth on what is covered if you have a renter's policy?
I sure will. So renter's policies cover your personal belongings, such as clothing, music, furniture, computer. It's what you own inside the apartment or house. The other important component is the liability protection. This may or may not be automatically covered, so make sure you know. If you have liability protection, it can protect against lawsuits for bodily injury or property damage done by the renter, either their family members and even their pets. Also, you will want to consider no-fault medical coverage as part of your liability protection. Always consult with your agent for guidance on the right coverages for you and your family.
That's a really key point right there. Having an agent, whatever company you decide to go with, is going to be your advocate and the person who is going to be able to help you and guide you and assist in getting the proper coverage. All right, now that we've gone over what is covered, why is it important?
Tina, imagine if your apartment flooded due to a burst washing machine hose, right?
And we've heard a lot of people having that happen, haven't we, Chris?
I have a coworker that's out of house right now because of that exact same thing.
Ooh.
Would you be able to pay for new furniture? What about a fire that destroys everything? A loss can be devastating financially, but for a little bit of money a day, you can protect yourself from financial hardship. And did you know that only 35% of renters, on average, have coverage. You may not think you have a lot to lose until you've lost it all. And the benefits of renter's policies protects you from theft, damages you cause, and visitors' injuries, to name a few.
All right, that's really good information. Let's have a brief recap.
Sure.
Okay, so we're going to have a little frequently asked to pay some questions that our audience may have. So let's see how we did on this. So the first frequently asked question is, if I live in an apartment, am I covered by my landlord's insurance?
Yeah, and that answer is no. Your landlord's insurance doesn't cover your personal belongings. Typically, only the building and damage due to negligence. This means that coverage in the case of vandalism, theft, that's entirely up to you.
All right, that's good to know. What if I don't have many personal belongings? Yeah, I have a couch, I have a bed, I have some dishes, I have the basics, but it's not a lot. Do I need coverage?
Most people don't think they have that much stuff until you move. And then your friends will tell you, oh my gosh, where'd you get all this stuff, right?
That's good, that's right.
Most renters' belongings actually cost more than they think. And the average person has over $35,000 worth of belongings. And just think, I mean, computers, smartphones, video game consoles, TVs, jewelry, it really does add up quick.
Just the thought of losing a cell phone or something. I mean, those aren't inexpensive, are they? So things do add up. You're right. When you go to move and you ask your friends, they'll let you know. That was great. All right. How do I know how much coverage I need?
All right, yeah. So the first thing to do is take an inventory of your possessions. And a good way to do this is just listing items by room, or you were just talking about the smartphone, right? Use your smartphone and video the contents of each room, and don't forget your closets.
That's right, especially
yeah.
for those who have lots of clothing and shoes.
I remember the first time I did this, I was walking around with this strange thing in my hand called a video camera. Maybe you've heard of it. It wasn't that long ago.
You cut out, Chris.
Oh, did I?
Yeah, you were walking around with. And then...
No, it's fine. The joke was terrible. So, another good thing to know, though, is if you have a high value collection or maybe expensive jewelry, you might want to consider a special policy to cover those items specifically, as the basic policy limits the amount paid out.
All right. So on average, how much can we expect to pay? I mean, is this thousands of dollars, hundreds of dollars? What can we expect?
Yeah, the average cost of a renter's insurance is really only about $12 a month. And that's for up to $30,000 in coverage. But it will ultimately depend on the coverage you need. That's why, again, it's important to talk this over with your trusted agent or advisor. We're going to move on to homeowners insurance basics now. I will tell you, though, the questions in the Q&A, I'm seeing them out of the corner of my eye, and I'm glad we're going to cover some of these later, because this group's active.
Yeah,
really actually listening to us, Tina. That's cool.
Yay. All right, let's keep the engagement. Let's keep the attention going here. Okay, we're on to homeowners insurance basics. Okay, so if you recall, a homeowner's policy is when you own the home and you own everything in it and outside. Buying a home is going to be your biggest financial transaction. I don't know that we need to sit here and tell you that. You probably are very well aware of that. So let's have some audience participation now. And if I understand, we'll use the chat here. What are some things that can pose a hazard? So pose a liability or a problem for you on your property that you could be liable for, and you would want homeowners protection? Anyone want to throw out something?
Tree.
Tree, yeah.
Oh, Christmas tree.
Not sure they're referring to that kind,
Oh,
unless it's like this Christmas movie I saw last night, The Tree Caught on Fire.
yeah. A fall, maybe somebody falls. Space heaters, not a Christmas tree. Yeah, I know. Bad outlets.
Outlets.
All right, yeah.
Yeah, wow.
That's some outside stuff. Can you think of outside things?
Someone in the Q&A put faulty wiring.
Faulty wiring. All right.
A pool, there you go.
Yeah.
So
Pool,
probably,
games and swing sets. We call those attractive nuisance.
nuisance.
Say.
Easy for you to say.
Newton. That's a good list. That's
Yeah.
a good list.
Yeah, so exactly. You guys got it. Other things with a hole in the ground, an open well, you know. So let's burst the pipes outside. Yeah. Hopefully you all haven't experienced any of that. Maybe you know all this from other people. But so let's review. Thanks for participating. We really appreciate that. Let's review what's covered in a basic homeowners insurance policy. So when we talk about the dwelling, that residence, the structure, and a structure that is attached to it. So maybe, you have a garage attached or a storage building attached. And when we say attached, it's attached from the roof or maybe a breezeway or something that physically is an attachment from the house to that structure. Because if it's not physically attached, then it's called an other structure, which is a detached dwelling. So that could be still a garage that maybe sits, off to the side of the house, but not attached to it. That could be a shed, storage building, a fence. Those are going to be called other structures. Right, personal property. Of course, your personal possessions, as we talked about already, furniture, appliances, jewelry, lawn equipment, that sort of thing. Another term, we have loss of use. So covers the house becomes unlivable due to a covered loss. So for example, if you were displaced from your home due to a fire, your homeowner's policy would cover some of the costs of a hotel or rental property while your home is being repaired. In some cases, food and other expenses may be covered also. Right, liability, we talked about liability a little bit already. That covers a claim or suit filed against you for damages. So liability covers damages for what you are personally responsible. So someone comes into your home, gets hurt, and they want to make you pay for it. Medical payments, expenses for bodily injury to others on your property. So, Chris, we have an example here of someone stepping in a hole and breaking their foot. I wonder who's had some experience with that one.
When I was a kid, we had a dog. Her name was Mindy. She was a black lab, and Mindy liked to dig holes in the backyard. And we had some friends over for a cookout, and my parents had friends over. I was a kid. What did I know? And the lady stepped in a hole and rolled her ankle, broke her foot, and they didn't have health insurance to be able to cover that, so they decided to go through my parents' homeowners insurance to pay for the broken foot that she had there. That's a true story.
Yeah. So again, the unexpected, you never know, and maybe it depends. Maybe if it isn't so much, you might be able to pay out of pocket. But you never know when that could add up, and you're happy you have that coverage, that insurance coverage.
Yep.
Right. how about we cover some frequently asked questions on the homeowners insurance side? All right,
Sounds fun.
quiz time. All right, you ready?
Oh, you would quiz me?
I'm going to quiz you.
I signed up for this? Yes, yes,
Come on.
team.
All
Let's
right.
do it. Let's do it.
Do I have to have homeowners insurance?
Yes, especially if you have a mortgage. The bank wants to make sure their investment is covered too.
All right. How will my insurance premium be paid?
Large bags of cash. No, it's a joke. Well, if your lender manages an escrow account for you, a portion of your monthly mortgage payment will go towards your annual premium. And when the bill comes due, your lender pays it on your behalf. Well, that's pretty nice.
That's a load off, right? I mean,
One less thing to worry.
What was that?
One less thing to worry about.
Exactly. Yep. All right. Now we have deductibles again. We talked about deductibles a little bit already, but how much is the deductible and do I choose it?
Yeah, well, different companies have different offerings, right? You choose a deductible that's right for you typically. And again, higher deductible usually means lower premium. Typically, homeowners insurance deductibles are about 1%. And let's say your home is insured for $200,000. A 1% deductible means you would pay the first $2,000 out of pocket, and the insurance policy will cover the remainder.
Okay. All right, next question. How do I know how much coverage I need?
Well, you should insure at least the cost of your home. Replacement cost is intended to put your home back in the condition it was prior to the loss. Sounds reasonable, right? And to determine this amount, your agent is going to be the best source to help you calculate that value. They all have special tools and resources to figure this amount.
All right, you cut out again on they all have special
Tools.
okay to help figure that out.
Yes, ma'am. Yes, ma'am.
Yeah, and another going off a little bit here again, but even when you're in your home, you've had your home and you have your insurance, it's always good to do a financial insurance checkup every now and then, because I'm sure all of our audience out there is well aware of home prices right now and how things are going up, which means the cost to replace your home is going up. So you want to make sure at all times that you're within range, should there be a loss, that you have adequate coverage.
Yeah, that's a great point, Tina. We bought this house 8 years ago, and I don't think I could afford this house today. So you're right. It's a good reminder to me. I'll call my agent probably next week, but yeah.
Make a note.
Yeah.
Yes. Okay, so once you have your homeowner's insurance, can you change it?
Absolutely. Yes. You can change it anytime. You just have to be sure to notify your lender, especially if they're managing that escrow account for you.
Oh, good point. Okay, if I'm in the process of buying a home, when should I start shopping for insurance?
You should start shopping as soon as you're under contract on a home. That's really the best time.
All right. So we've made great headway so far. Taking a quick peek at the time. It looks like we're about halfway through time-wise, and I think we're probably in a good place. So we're finished with renters and homeowners insurance. Now we're going to move on to my favorite line and what I think or feel is the least appreciated coverage, and that's life insurance.
Yeah, Tina. Yeah, life insurance is very important and the most likely overlooked type of insurance. Let's go back to our chat area here. We want to hear from you. tell us,
Not just me, but the audience, right?
yeah, yeah, well, I love hearing from you. But we want to hear from our audience. That's right. We want to hear whom or what do you value the most? And this is a good time of year to reflect on what we value the most, right? Being around the holidays, we tend to think about the people and the loved ones a lot. So we got our kids in there, we got family.
Kids and
Yes.
family. Yeah.
Yes, this was a test and everyone's passing so far.
I mean, someone could put a car, is that wrong?
Hey, it's what gets the family from point A to point B,
There
right?
we go.
I can't go to grandma's house without the vehicle, right?
That's
We
right.
value our time with grandma too.
All right. Yes, this is great.
Yeah. So Tina, I'm going to go to the next slide here, and I'm going to ask you, have you heard the old expression, you can't take it with you?
I sure have.
Yeah. What if I told you
Does
that
that mean-
life insurance?
Okay, wait, another topic.
What?
I said, does that mean I don't have to save any money and I can spend everything right now? Never mind, that's another topic.
Call your husband later and tell him you said that. No, but well, what if I told you that life insurance, if we can't take it with us, right? Life insurance is a great way to help leave it behind. Life insurance is a simple way to plan for the financial future of all of these people that we just listed in the chat, the people that we love, right? And these are the people that depend on us financially. So Tina, I'm going to take a break from speaking here for just a second, clear my throat. Will you share with everyone the basics of life insurance and how it works?
All right, yes, I would love to. First, you can buy life insurance on yourself or someone else. In order to buy life insurance on someone else, you need to have what is called an insurable interest. So for example, an adult child purchasing insurance on a parent, the life of a parent, or a parent purchasing insurance on the life of a child. When the policy is purchased, you identify a beneficiary for the policy. That's the person who's going to receive the monetary amount of the policy that's called the death benefit. So for example, Chris and I are friends and coworkers. I don't have an insurable interest financially in his life, so I can't take out insurance on him. But for my husband and my children, certainly I can.
This next line is getting harder for me to say as we get closer to my birthday at the end of the month.
I remember that.
I'm young and I'm not planning on dying anytime soon. So I'm going to wait until I'm 60 before buying life insurance. How's that sound?
Well, you can certainly do that, but there's something to remember about life, or in this case, death. It isn't always according to our timeline. So you can wait, but also know that the younger and healthier you are when you buy it, the least expensive it is. So buy a good life insurance policy early is the best advice to give.
Very good. So we were talking about the insurable interest part, and you've kind of given me some ideas to think about as far as to when to buy it. Can you tell us who can benefit from life insurance? All these family and kids that we're dropping in the IM over here.
Yeah, please. As you mentioned, buying life insurance when you're young and healthy will make it less expensive. Life insurance helps cover the expense of a funeral, burial. The next category is established families. So in this case, you probably have dependents or others who rely on you financially. Life insurance can help with the day-to-day expenses or even college. And then the next area for all of everyone out there, homeowners. If you pass away unexpectedly, who will pay the mortgage on your other debts? If you die with debt and no way for your estate to pay for them, your assets may be lost and not passed down to those you want to inherit them. If your estate is left with debt, this could be passed down to your heirs. Remember, life insurance is about protecting those you love once you're gone.
Yeah, and again, the IM keeps catching my eye, and I think that you just answered Elisha's question. All right, that was great information, Tina. So hopefully this has gotten our audience kind of thinking about the need for this coverage. All right, but Tina, what is this statement all about? There are costs of both having and not having life insurance. What does that mean exactly?
Okay. Of course, having a life insurance policy is going to cost you some money. But remember, today is the least expensive day that you can purchase life insurance. Your agent, again, we're sending you back to your financial advisor, your agent. They can help you find the protection that makes sense for you and for your budget. Now, the cost of not having it, does your income pay the mortgage and bills, care, home maintenance, college for your children? Now, imagine if you weren't here, how would your family be affected financially without you in it? Obviously, they would miss you, but right? You're the breadwinner, let's say. How are they going to continue to live in their home without having some that replacement money?
Yeah.
And so therefore, that's the cost, the financial cost of not having life insurance.
Yeah, that's true. So we've already seen one good question. I bet our audience has lots of unasked questions. So let's see if we can guess what they are. We're going to go to the next slide. We got a little life insurance FAQ. So Tina, I'm going to quiz you this time.
Okay.
What if I have life insurance coverage through my work? Is that sufficient?
All right. It I don't know if it's just my side, but it cut out. So I don't know if maybe you want to ask that question again.
I would love to.
Okay.
Nothing would make me happier than repeating myself. It's kind of like talking to the kids, right? I said, what if I have life insurance coverage through my work? Is that sufficient?
All right. Having it through your work is an awesome benefit. And if you're able to purchase it or have life insurance provided as a company benefit, go for it. Usually, if you have to pay the premium, it's relatively low. So I would take advantage of that. However, I don't want to say a but however, I would not have that as my only life insurance policy. I would have a policy outside of the employer-sponsored plan. And I'll explain. So you may think you're going to be with that same company till retirement. There, you make a good living, you like it enough, you're in it for the long haul. But life may have other plans. Suppose you decide ultimately you want to leave the company. Suppose the company decides to leave you for whatever reason. There may be contingencies in the employer-sponsored plan, but many times the coverage may cease. It may just be done when employment terminates. Imagine you're 60 years old. Imagine, Chris, you're not young anymore, right?
Coming up fast.
The cost of getting your own policy at that time, it's going to be expensive. It's always best to have a policy on the side and take advantage of a company's sponsored plan if you can.
That's good food for thought, Tina. You give me way too much to think about tonight. Okay, here's another one. should I consider purchasing life insurance for my kids? I'll ask it again.
Yes.
Should I consider purchasing life insurance for my children?
Yeah. Well, that's something to consider. You or a family member may decide to give a permanent life policy as a gift to a child. There are also benefits of getting a policy for children to ensure they have coverage should something happen as they become, as they grow and may become uninsurable later. Chris, I'll share a story. When I was pregnant with my children, I contacted my agent and was able to get what is called a rider on my policy. I was able to secure a small policy for my kids before they were born to ensure that should something have happened or they not be as healthy when they're born and may become ineligible in their life to have, insurance. I already had a small policy that would protect them and could grow with them. So that's an option. Of course, you know what? I didn't even know about that. Someone I knew used to work in an agent's office and they told me about it. It was Monica. Remember Monica? Anyway. And so, but again, that's another benefit of talking to your agent who knows all those ins and outs of the various policies. So just a plug in general, when you find a company, an insurance company that you're going to have a relationship with, talk to your agent, let them know, oh, you're going to have children, or maybe your children are going off to college, or whatever your life event. Talk to them. They'll help you through every step and make sure you're covered in more ways than you can imagine. At least they'll give you the information and then you can make the decision whether you want to do anything with that or not. Okay, my little plug for agents.
Good ones are always listening and thinking. And it's not always about selling. It's about making sure you have the right coverage for the right times in your life, right?
Yeah, exactly.
And we're not agents. We just know some of them.
Yeah.
All right, let's move on here. We already kind of had this question, but we'll see how you do. What about life insurance as a homeowner?
All right. Well, it's not mandatory to have life insurance if you're a homeowner. But again, if you're the chief breadwinner and in the family and you pass away, think about what the situation is going to be, for your family. So that life insurance money can certainly help them.
Yeah, I think about that a lot. Could my wife pay the mortgage by herself if I was gone? And if I'm gone, they're not gonna be able to live here anymore.
Right.
I have to move in with my mother-in-law. Hi, hey, I'm back. Tina, you just mentioned permanent insurance. And I've heard that term as well as term life insurance. Can you tell us what the difference is?
Yes. Okay. So to put it simply, permanent lasts forever, as long as you pay the bill. And term is temporary. Okay. So you may have heard, audience, the term whole life insurance. That's an example of permanent insurance. It's often the denomination might be 100,000 whole life policy, which means you pay the premium when you die, because we know we all are, right? Not if, but when, and that policy is been paid, then you have $100,000 that will go to your heirs. Obviously, that's very simple, simplistic. Whole life can build cash value, so it earns dividends. You can take those dividends and apply it to the premium, so maybe you don't pay as much, or you can apply it to buy additional. So that 100,000, 110,000. So that's what's considered by permanent, and I share a little bit about whole life as an example. Term insurance is a shorter time period of payment and coverage. term is great for when you have dependent children at home. Basically, when you need a lot of money for a smaller amount of time in your life. So let's say, you have children, you want to get them through college, you have a home. And so you might think, well, if I got a 30-year term, I'll pay for 30, monthly for that term policy at however denomination, whatever amount, you select. So that if something were to happen during that term, then I have this large policy. But once the kids are out of the house, paid down, maybe paid down, paid off, you may not need as much coverage. So it depends on where you are in your life. So the term is a really good type of policy when you need a lot of coverage for a little time. It's less expensive to do a term policy.
Very good. Very good. Thank you. Those things always confuse me, trip me up. I'm glad we have you. Okay, Tina, look, we've talked about homeowners, right?
Yep.
We talked about renters. We talked about life insurance. And now we're going to move on to our last topic, and that is auto insurance.
All right. This is an important topic too, because most of us have cars and we get back and forth to the store and work and vacations and so forth. But we also probably have a pretty good understanding. So I'm going to roll through this a little quicker at the end. Just want to keep an eye on the clock for everyone out there. So if you have a car, you need it, right? So, Chris, actually, you're sharing a lot of this here. I was saying I'm gonna take over this. I'm sorry, I totally took your.
No, I see what you're doing. That was a subtle way of saying, Chris, hurry up, right? I got it.
All right, so let's just go through some of the basics terms, shall we?
I'm going to put them up on the screen instead of being fancy with it.
Okay.
And I think that's the last one there. And now I'll talk about them, right? So you're right, Tina. If you got a car, you have to have it, especially in the state where you are. One good thing to know is that not all of the coverages are mandatory. So there's a bunch of coverages on the screen right now, right? Texas law requires drivers to show proof they can pay for the accidents they may cause. And most drivers do this by buying auto liability insurance. All other coverages are voluntary. And we're going to dig into which ones these are and what they cover. So liability insurance pays for repair or replace to the other driver's car or other damaged property, and pays other people's medical expenses when you are at fault in an accident. We have personal injury protection. It's also sometimes called MedPay, depending on, or medical payments coverage, depending on what state you're in. Some have both. But PIP, as it's called, is similar to MedPay. It pays your and your passengers' medical bills, but it also pays for things like lost wages and other non-medical costs. All auto policies in Texas include PIP coverage. If you don't want it, you have to tell the company in writing that you don't want it. Medical payments coverage pays for your and your passengers' medical bills. It also pays if you're hurt while riding in someone else's car, or even while walking or biking. Collision, this helps pay for loss or damage from a crash to a covered vehicle, which is caused by a collision with another car, or a collision with an object, or even a vehicle rollover. Comprehensive, this pays for a loss or damage to a covered vehicle, and a covered vehicle is the vehicle that's listed on the policy. And that's not caused by a collision or rollover. And an example of that may be a fire, hail. You guys get a lot of hailstorms there in Texas, flood, theft, vandalism, or even contact with an animal. Uninsured motorist coverage and underinsured motorist coverages are very similar. Uninsured motorist pays for damage if you're injured in an auto crash caused by another driver who does not have liability insurance. So if somebody's driving around, doesn't have any insurance, or their insurance policy lapses and they just didn't know about it, they hit you, uninsured motorist coverage will help pay for your damages. Underinsured motorist coverage pays for damage if you're injured in an auto crash caused by another driver who just doesn't have enough insurance to pay for your losses. And an example might be their policy may cover only up to $25,000 in damage, but the injury or the damage done to your vehicle exceeds maybe $50,000. This coverage can help fill in that gap between that $25,000 max of their policy and the $50,000 that you actually need. Rental reimbursement pays for rental expenses if your car is disabled due to a covered loss. So it's sitting in the shop, you still got to go get groceries. You need rental coverage reimbursement for that. And emergency roadside service pays for having your auto towed due to a breakdown. Also pays for other small things, but towing is the main thing.
All right. Well, many of us already have lots of experience, as we say, with auto insurance. We'll cover some questions related to premiums, you know, how much you pay. All right. So Chris, what amount of coverage are we required to have in the state of Texas?
Yeah, so liability coverage is a mandatory coverage. And this coverage pays for the damage due to bodily injury, property damage, so on and so forth. The minimum required limits you must carry are 30, 60, 25. And these numbers are actually in thousands. The first number 30, that represents the first number 30 represents the coverage for bodily injuries you cause to one person. So $30,000, right? The second number 60, that represents bodily injuries you caused to all persons involved in an accident. And that cap would be $60,000. So let's give a quick example. You accidentally rear-end a car that has 4 passengers, all claiming injuries. And the most any one person in this loss would receive is $30,000, with all people's injuries maxing out at $60,000. If the dollar amount of injuries exceeds $60,000, you may be personally liable for the excess. Now that last number, that 25, that represents property damage to the vehicle you cause, that you cause damage to, right? And in this scenario, the maximum that we would pay for damage to another vehicle is $25,000.
All right, let's stop there a minute. Are you saying that the state of Texas requires I have at least these limits?
I am.
But Chris, $25,000 to repair someone else's car isn't very much. Suppose I had a brand new car. Most cars cost way more than $25,000.
I walked by a Tesla dealership the other day. I think walking by I cost $25,000. That's what I ran. I ran really fast. No, you're exactly right. I mean, these are the limits that the state requires, but you should always consider carrying more coverage to ensure your protection. As you can see from the prior slide, there are a lot of different coverages you can carry. And when talking to your agent, make sure you fully explain what your needs are. Here's a tip for everybody too. Do not use the term full coverage as a means that can mean different things to different people. Be very specific on what you want. If you want collision coverage, say that that's what you want. If you want rental reimbursement, make sure that you say that too. Don't assume that you're automatically going to get those things. And sometimes people will say you're fully covered. They may mean that you meet the state required minimums, right? But not that you actually have all the coverages that you actually need. And the last tip is, if you go buy a new car, a dealer cannot and should not call the insurance company on your behalf to set up your insurance with them. We see it far too often. Only you can enter into that contract with the agent and the company, and you have to make that phone call. And as you can see, there's a lot of stuff in here. You want to make that phone call. You want to make sure that you've got the right coverage for you. Well, let's go to the next question, Tina. And I know we're running short on time.
Why might my rates increase annually if I'm a safe driver?
Well, there's so many factors that make up the cost of insurance. So we'll kind of try to speak at a high level on this one. Some factors are unique to the vehicle itself, such as the cost of repairs due to special features. I mean, the car that I bought has cameras. It listens to me. It's probably judging the way that I drive. Also, the likelihood that a vehicle is going to be stolen, these types of things can make a difference as well. Overall, number of accidents among drivers in general play a part, and other factors are specific to the driver itself, such as age, driving experience, tickets, accidents. Your premiums will certainly be lower if you don't have an accident or any motor vehicle convictions, such as speeding. All right. What do you think, Tina?
Yes, you cut out there. I'm sorry. I don't know if it's my end, but every now and then it gets cut out. But yeah, I heard the most of that, and I hope our audience heard all of that. So well, suppose right now, okay, we're coming out of COVID a little bit, but some people are still working from home or not having to drive as much. How does that impact my premium? Will it go down?
Yeah, well, whenever you have a change in your driving habits, vehicle changes, driver changes, it's always a good idea to consult with your insurance agent so they can advise you. During this time of COVID, of course, companies are handling the lack of driving a little differently. Some are returning premium to customers in the form of credits. Others have been lowering premiums by changing the miles driven. It's best to inquire with your specific company as to how they're handling things. One thing to keep in mind is the rating of a policy is based primarily on historical data with future projections. So it is what has happened in the recent past that impacts what the premium will be in the future. So just because I'm driving less today doesn't mean my premium changes today. But 6 months from today, when my insurance renews, they'll see that my driving habits have changed and potentially make changes on my upcoming renewal. But just because my driving habits change, I already told you, my age is changing at the end of the year too. Get a little older, need these a little more. That factors into it too. So there's never really just one factor that goes into that premium calculation.
Certainly covered a lot of material in this hour, and we're at 7:02. Let's see our summary. Any parting thoughts here?
Yeah, Tina, insurance helps you protect what you've worked hard for and what you care most about, as we saw in our chat here earlier, right?
Yeah.
And as we said, your single largest purchase is likely to be your home. Why wouldn't you have insurance to protect it? And we've seen how life insurance can protect your family and assets should something happen to you.
Yeah.
And we're all familiar with auto insurance, which we just talked about.
And if you're not sure where to start, contact an agent with a company. Sit down with them. They'll explain it and really make sure you understand what they're saying. And hopefully this session gives you a little bit of some information in your back pocket. Make sure they're, you have a little knowledge going into that conversation.
Yeah. And you're working with great people here. There's one on the camera right now. They've got a preferred agent list. They can help you out. I know they're here to help.
Yes.
All right.
Tina, Chris, thank you. Thank you guys so much. We would like to have a Q&A session if you guys have a few minutes, just because I know we went a little bit over. I know, Chris, you mentioned Odette has sent you a few questions, but kind of just covering up, we had a client mention, do I need life insurance for my family or my house as well, or both, or one or the other, or what do you recommend?
Yeah, it really is for all of those things, right? It's not a requirement to be a homeowner, but as we were talking about, as the chief breadwinner, if I'm not here anymore, my family might not be able to afford to keep the house. So it really is. I mean, it's to pay for the mortgage, but it benefits the people that live here, the people that I care about.
Okay.
Sometimes you can get mortgage protection insurance. So your mortgage company can provide a policy. Just make sure you look into that, and you can get one general life insurance policy to be used however it's needed versus getting a specific for like a mortgage protection.
Yeah, and I believe, Tina, you're talking about PMI, right? The mortgage that the lender uses. Is that what you're mentioning?
Well, that is if you don't have the 20% down,
Okay.
if you pay that insurance. But, and maybe the terminology isn't coming to my head, but the mortgage companies will offer oftentimes a policy that if something were to happen, it will pay off the mortgage.
Okay.
Like
Right.
life insurance that's specific to the mortgage.
Yeah. So just be mindful of that. Make sure, obviously, with any policy you read, the fine print, how much it's going to cost. You might be best to take that money and actually put it into another life insurance policy that can be used for anything and not just, the mortgage.
Okay. No, awesome. And thank you, Chris, for bringing up the full coverage, because yes, in day in life, through our experiences, everyone has owned a car or had a car. And so, everyone says, oh, I need full coverage, right? But depending on the lender, one policy might be different to the other lender. So thank you for, breaking that down more, because, me personally, I have been a victim of, oh yeah, I need full coverage, and not knowing what I'm asking for. And so, that can cause where you pay a little bit more than what you have to be, or what you might need, So great information. Thank you for all that.
And we always find out too late, right?
Correct. And it's always good. That's why we like to host these webinars. It looks like we probably don't have any more Q&As, any chats. We're going to give it a minute or so. But I do want to thank you guys. You guys have been amazing. I think you guys made it pleasantful as much as we can for insurance. And people have, walked away with more than what they were expecting. We're getting a few thank yous for the information. And since we have no more Q&As, I just want to let everyone know, thank you guys for joining. I do want to let you guys know that this will be the last webinar for the year of 2021. And we do plan on having a few already for 2022. So definitely check out our calendars. We have setting financial goals and resolutions on the 11th of January. We have a home buyer education class that's going to be on the 15th. So get with your counselors about that. And then we have income taxes and qualifying for a mortgage loan. So on the 25th. So definitely check in those. And if you guys can RSVP sooner. Again, Tina and Chris, thank you guys so much. If you have anything else, we want to say thank you and happy holidays, and have a good new year.
Thank you for asking us. It's been our pleasure.
Absolutely. Thank you, everybody.
Thank you, guys. It was a pleasure to have you guys again. Happy holidays.